These are money markets. This is supposed to be parked currency that's in a safe haven bet. And where does it go? It goes to places like gold. There's $7 trillion, 7.5 trillion sitting on the sidelines that could seek a safer haven than this supposed safe haven. It's nothing but an IOU. It has counterparty risk. It's not the real safe haven investment. This 7.5, when this goes south next time, a lot of it is going to be headed toward gold and silver. Hi, it's Mike and Alan once again with the Gold Silver Show. Alan, you've got another presentation for us. Hit me with it.
Yes, thanks, Mike. So there is so much currency sloshing around the system, and in this video, I want to see where it's going and why and where it might go next. So we start here with a chart from Bar Chart. Just in, a staggering $7.5 trillion is now sitting in money market funds, a new all-time high. Wow. So you can see up here, 7.5 trillion. And there's something really interesting about this chart that I want to point out, which is basically that the amount of money or currency in money markets tends to go up before a crisis. This is like so fascinating. So before the dot-com bubble, we saw this rise a lot, and then it only corrected slightly, very slightly. And then before the global financial crisis, it rose a lot and only corrected slightly. Then it hovered around the same level for a few years. And even before COVID, right before 2019, it started going up as if the markets were expecting a COVID crash or something like that. And, it went sideways. And then now it's going up again as if the markets are expecting another crash. This is so fascinating.
It is fascinating. So yes, the more that we look at all of the data, the more that I think that we are in for the greatest crash in history, possibly worse than 29, because we've got the phoniest monetary system. And if they're able to stop the crash this time, it's just going to be the QE5 is going to be the biggest print in history. And my update to my original book talks about the financialization of government. As markets collapse, so does government revenue. So deficit spending will be going off the charts. So the amount of currency that they're going to print this time around is going to be astronomical. But another thing that I want to say about this, you notice that after a crisis, this shrinks. Why does it shrink? These are money markets. This is supposed to be parked currency that's in a safe haven bet. And where does it go? It goes to places like gold. There's $7 trillion, 7.5 trillion sitting on the sidelines that could seek a safer haven than this supposed safe haven. It's nothing but an IOU. It has counterparty risk. It's not the real safe haven investment. This 7.5, when this goes south next time, a lot of it is going to be headed toward gold and silver.
Exactly. Get your real assets while you can.
Yep, cover your assets.
Cover your assets. Shocking stat of the day. The bottom 50% of U.S. households now hold just 2.5% of total U.S. wealth. Yikes. History says rate cuts with stocks at record highs will lead to even more record highs 12 months from now. Asset owners will party and the wealth gap will widen, especially as core CPI inflation is back above 3%. Okay, so the bottom 50% of households hold 2.5% of US wealth. And by the way, that's not the orange section here. It's actually, because that's the 50 to 90th percent. The bottom 50% is the light blue at the very bottom of this chart that you almost can't even see. Okay, that's the bottom half of households in America owning just 2.5% of wealth. Meanwhile, all the other category groups are rising exponentially. So the bottom half of Americans are getting left behind because of all the phony baloney currency created out of thin air.
Yeah, there's a couple of things that I see in this chart that I want to point out to people. First of all, as we grow the currency supply, and because this is measured in trillions of dollars, right?
Yes.
180 trillion. There's a T after it up
Mm-hmm.
there. And so being measured in trillions of dollars, as we grow the currency supply, this thing goes up. And because it's going up, it makes it, because the currency supply keeps on getting larger, that blue area, if you go back before 2008, it looks like it starts out really small and gets bigger. It probably doesn't. If this was a logarithmic graph, what we would probably see is that this was biggest in the 50s and 60s, and it's been shrinking ever since Nixon took us off of gold. And then what you do see here that's amazing, that you actually shouldn't see because of how this chart is going exponential. Actually, I got to flip that for the audience. It's going exponential. Is that in 2008, it sort of hits a maximum, and then we get into the global financial crisis. And Ben Bernanke changed the way currency is created in the United States when he introduced quantitative easing. And it enriched anybody that gets their net, when they determine their net worth by the size of their stock portfolio, when their net worth is based on financial assets such as investment real estate and stock portfolios and bonds and so on, instead of the house that they live in and their savings account. That bottom blue line there, the bottom 50% being squeezed to just 2.5% of the wealth, that's a collapse that has been caused by one man, Ben Bernanke, and it just shows you that central planning doesn't work. He central planned the entire world monetary system. Everything changed. All the other countries jumped on board with him. It is his fault. The bust that we are about to have is the Bernanke bust, but Janet Yellen carried on the tradition, and Jerome Powell took over from her. The only thing that these people know is take interest rates down to zero so that the banks create more currency and light up the printing presses at the Federal Reserve. That's all they know. And they truly should be ashamed of themselves because they did this. They impoverished the bottom 50%.
Yeah. Absolutely. And the bottom 50%, generally speaking, have no idea what's happening, right? They blame themselves, each other, a different political party, foreigners. They just pick a scapegoat and they don't understand that it's the money. And this is what kills me the most. Like, it hurts so bad. It's like, if we didn't have, Nixon and then the central bankers you talked about, if they didn't do all this, the bottom 50% would already have a tailwind helping them of sound money. And they wouldn't have to struggle to survive. Life would be so much easier for everybody.
Right. So, today, the way currency is, well, it's always been this way under a fiat monetary system. But whenever they create currency, whenever they do something to react to a so-called emergency, instead of letting the markets clear out the excesses and start, you go through a really bad recession, and then you start from a fresh, sound foundation, and you go into the next bull market. When they do all of this hocus pocus like quantitative easing, you've got this crumbling foundation. They slap Band-Aids on it, and then they inflate the next bubble. What it does is it steals from that blue line at the bottom, and it gives to the people in the red and the purple lines. They are the beneficiaries from the collapse in the blue line. It's just plain theft. These people should actually be in jail. I'm sorry, the people at the Federal Reserve, people doing this. This is theft, and it's enslavement too, because the people that lost that blue line, they have to work harder to make up for what's been stolen from them.
Exactly. I completely agree.
If you go to GGSR 21, and along with in chapter 4, the hardest chapter in the book. So read chapter 3 first. It's going to take you 15 minutes or a half an hour, and it's fun. Chapter 4, hard. It's busted up into 8 sections, and the 7th and the 8th section, watch the videos that go along with that, because I take a detour away from the book. There's information in there that you're going to want to know. about wealth distribution, and you can very clearly see what causes this.
Exactly. And that reminds me, Mike, of my upcoming series, Hidden Secrets of Value, inspired, of course, by yours, Hidden Secrets of Money. And my first episode is saving versus investing. So if you just hold gold and silver, I think of that as saving. And that's what people have been able to do for thousands of years, is just hold the money they earn. And this whole nonsense of trying to pick, do I buy stocks? And if so, which ones, or bonds, or real estate, and just spending all this time and energy figuring out what investments to hold is just wasting everyone's life. I mean, you traditionally could just save the money you earned, and you still can. You can still just save gold and silver and then forget about the quote unquote investing. So I've got a series coming up. It's going to launch next month in October. And this is the first episode here. So I'm super excited about it.
Excellent. Awesome. Talking about the monetary system, if we were using something of limited quantity like gold, where it grows at about the rate of the population, maybe a little bit more, maybe a little bit less, we would experience a world where there wasn't this constant wealth redistribution from the poor and the middle class to the uber wealthy. And what you would see is that you would actually be able to hold your gold or silver or whatever we used that was of limited supply at home. And it would be a somewhat deflationary environment where your purchasing power would increase constantly. Why? Because man gets more efficient. We figure out better ways of making things, and we are constantly more productive. Everything should naturally be falling in price, not going up. This is all an illusion that we live in, caused by the Federal Reserve. Exactly.
I agree completely. And that was a huge epiphany for me when I realized that the CPI went down every year on average until 1913, the creation of the Federal Reserve, and then it started going up. And then, in 1971, it started going up like a hockey stick.
Yeah.
So, yeah, sound money for the win.
And Wall Street is better off for it. The wealthiest people are better off, but not the average person.
Exactly. So we've got a breaking news here. This has never happened before. S&P 500, all-time high. U.S. home prices, all-time high. Bitcoin, all-time high. Gold, all-time high. Money supply, all-time high. Public debt, $37.4 trillion, an all-time high. U.S. labor market in a recession. And the Fed is going to cut rates next week. Okay, so this is a little bit of old news here. What is happening here? So yikes, Mike, this is a crazy setup. This is for the biggest crash in history that you've talked about for more than a decade. What do you make of all this?
Well, that is all that it adds up to. The labor market is in a recession. The Fed looks like they're going to be cutting rates. That adds up to there is an emergency right now, and we're in the greatest bubbles in history. If there's anybody watching this video that didn't watch my bubble whip video from a couple of weeks ago, please go watch it so that you understand where the economy is. We are teetering right. I talked about a knife's edge or on the edge of a cliff. And in my book, one of the, in chapter 5, you and I prove, then this was in 2022, that we were already pretty much in the biggest bubbles in history in all asset classes except gold and silver. And I keep on repeating, the higher the cliff, the bigger the fall. In order to get back to just realistic levels where the financial sector is in balance with the rest of the economy, right now, the Federal Reserve has warped the economy to unprecedented, dangerous levels. And it is 100% the Federal Reserve's fault. And so this crash, just when it comes, and it will, it isn't a matter of if, it's only a matter of when. When it comes, just realize two things, that this is Ben Bernanke's fault and the Federal Reserve's fault. It isn't the market, the free market. When they scream, oh, the free market isn't working. No, it is working. It's overwhelming the manipulation that they did, the bubbles that they caused. This is the inevitable result of their actions. And what's worse is their reaction to the market trying to correct and overwhelm their manipulations is going to be more manipulation, just setting us up for something worse the next time around.
Yeah, I agree. And speaking of manipulation, I didn't even talk about the chart that we have on screen here. Someone's manipulating the payroll numbers because they don't make any sense. We've got the largest downward revision in non-farm payrolls on record, as far as I'm aware. And so people have heard about this. This news is over a week old. But yeah, basically, we've got two big downward revisions annually. So it's like the job market is nowhere near as good as what was claimed the last couple years. So nonsense.
What I want to point out to everybody is look at how many red bars there are compared to green bars. Yeah. These are only the revisions. This isn't how many jobs. This is the change of what they said it was. And then a couple of months later, they go, oh, we were wrong. It was really this. Except that doesn't make the news, except this time it is making the news because it's the biggest revision in history. And what it says is you've got 3 bars in a row there. The economy is sick. And yet we're at all of these different all-time highs. Stocks, real estate, Bitcoin, gold, currency supply, debt. But the economy is basically on life support. This is an absolute disaster waiting to happen.
Yep.
And this could be the trigger. Who knows?
Yeah. And Sven has a nice comment on what we just saw in other news. Market that rallied on every fake jobs number over the past 2 years is now rallying on news that the jobs numbers were fake.
I love Sven, and that is a great observation, and so true. I have no idea how people can be how they can just ignore the truth like this, how they can be willfully ignorant.
Well, that's the thing. That's the thing is so many people, they don't have time to study all the markets. And it's so sad because like I said a minute ago, it's like, in the good old days, you could just hold gold or silver and you didn't have to pay attention to the news or the markets. You didn't have to be an investor at all throughout your entire lifetime. But now because of what they're doing with the currency supply, and basically the currency is not backed by anything real, everyone has to become an investor. And most people are just not good at it. And I don't blame them. And so tons of people just go into the stock market because they don't know any better. So very sad.
You said most people are not good at it. And that is what I love about gold and silver. You buy it, you park it, and you sit on it. Yeah. No counterparty risk. And I mean, for anybody that doesn't know what counterparty risk is, it means your investment is no good unless somebody else makes good on it. The brokerage house actually pays you for a stock that you sold. If you were a customer of Lehman, that was very questionable. If the U.S. government, if you hold a bond, they've got to promise to tax somebody in the future to be able to pay you on that bond. If you look at the history of sovereign defaults, countries defaulting on their promises to pay throughout the world, I mean, it's just a total disaster all throughout history. And so you've got the only 2 things that I know of that have absolutely no counterparty risk. Even if you've got real estate, you've got to go through escrow and settlement, and there's possibilities of here in Puerto Rico, every once in a while, when you buy a home, you want to take out title insurance to make sure that there's nobody else that thinks they also have title to your property, because it happens. Anyway, there is always counterparty risk with everything except for gold and silver.
Yep. Love it. The great Martis says, earnings are collapsing, buybacks are masking reality. Guess what happens next? Okay, so he's talking here about the S&P 500. So below is a line chart comparing the S&P 500 earnings per share with and without the effect of stock buybacks, basically over the last 10 years. And so the blue line is earnings per share, and it looks like it trends upward for 10 years. There's a COVID correction here, but it trends upward. So it looks like earnings of S&P 500 companies are going up. However, when you eliminate Stock buybacks, you get the orange line, and you can see that in general, earnings per share are going down, which means the companies aren't earning as much per share of stock outstanding.
So the only reason it's going up is because there's less shares out there because the companies were taking profits and buying back those shares, taking them out of the market.
Exactly.
And they've got a certain amount of earnings. If there's fewer shares to divide that earnings by, there's more earnings per share. So it's all fake.
Exactly.
But on top of that, this does mean that all of those companies are betting that their stock prices will go up, which would mean if some of these companies have to see look at Buffett. He's got more cash on the sidelines right now than he's ever had in history. He's getting ready for the next big crisis because he's going to be able to scoop up some deals. And if these companies are buying their own stock, they must, anybody that's educated would think that they're betting that their stock prices are going up, which means a melt up caused by printing. It means a whole lot more currency. It means lowering interest rates. It means emergency maneuvering. It means QE5. It means the potential. That QE5 could be like the destruction of the dollar. That's an outlier case. But when you're talking about doing what Ben Bernanke has done, and then the result was the bubbles that we're in, and these are the biggest bubbles in history, it's going to require so much more as a percentage of our currency supply, as a percentage of GDP, as a percentage of stock market capitalization. The amount of printing and the negative interest rates that are going to be required to try and stop the plunge that I believe is inevitable. If they don't do it, we're in for a super bad recession. If they leave it alone, we might come out of it, but they're not going to leave it alone. We know their playbook. They've only got everything looks like a nail when your only toolbox is hammers, and they can either take interest rates down and encourage the banks to do so, getting the banks to create more currency, because 92% of the currency supply is bank credit, or they can create base currency, two forms of it: cash in circulation and bank reserves. And with those bank reserves, for those to come into existence, they have to buy U.S. Treasuries or mortgage-backed securities through the open market, which is the primary dealers. And so you're talking about buying stuff from Goldman, J.P. Morgan, Bank of America Securities, and so on, UBS Securities, which means it's being pumped into the financial sector. So they create $2 trillion, $4 trillion, $10 trillion, and then they buy something from the financial sector. What happens? The financial sector goes up, but it dilutes the currency supply, stealing wealth from the people that don't determine their net worth by their stock portfolio, and giving it to those who do. So it's just an immoral system that we need to end.
I agree completely. Our meme of the day. And then I told them, this is a strong economy.
That is hilarious. I want to thank everybody for watching, and thank you, Alan, for this presentation.
Thanks, Mike. Thanks, everyone. Invest and earn up to $2,000 in bonus silver at goldsilver.com. It's easy. Step 1. Open any gold silver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit goldsilver.com/free silver to claim your silver.